Good afternoon. All right, well, welcome back. Today, we're going to use our QuickBooks to set up credit cards and keep track of our credit card and accounting. Credit cards are a convenient way of paying things, of course, but also very dangerous because if you give the credit card to the wrong person, they could buy the wrong stuff. A business will set up its credit card policy, and if you're the boss, you can set up the policy. Sometimes there are only certain people who can be signatories on it and use it only for special purposes, or you can just use it for general purposes. One thing credit card companies will do to businesses or for businesses is they'll give you special offers that if you have a certain volume, then they will give you bonus points or something like that. So they'll try to sweeten the pot so you'll use it a lot. So some people will use it even if they don't need the credit, but they just want to use it to rack up either incentives or bonuses for buying their general products and things. So you can do that. Another use for it would be, like when I worked for the county, each of the cars the county owned had its own credit card with it. So that way it was an additional method for keeping track of the expenses of each individual car. So that's a possibility too. When I checked out the car and I used the card, I asked the gas station attendant, so how does this work? And he said, well, you can only buy gas. You can't buy beef jerky. If you do, it won't work. So you can set credit cards to that. Now, I didn't try it because I would have got in trouble, but I was curious, like, really? I mean, do they really do that? So he said so. So I imagine you can, especially these days, because you have so many different controls on technology stuff. So that would be another use for them. You can also have sales reps, and you can give sales reps each a card to use for their expenses. And that keeps them from having to turn in a whole bunch of receipts and going through that whole process. All the receipts are on the credit cards. Credit card companies themselves can set up your card to categorize expenses. So if it's, for example, under restaurants, it'll always put it under meals and the meals account in the chart of accounts. Then if there's a couple that you did personal meals, you can deduct them, you just remove them. But otherwise, you got a pretty good accounting at the end of the day without having to do a whole bunch of work. So to set up a credit card, we have to go into our chart of accounts. A couple ways to get there. I'm going to go to my accounting tab in chart of accounts. So this new account will go against your $350 included in the plan. It's okay, we've still got plenty more. But you could have multiple cards. As I mentioned, if you have 6 sales reps that go out and do things, you might need 6 cards and you want to track them separately. So I'm going to click on New. And under Select Category, it's going to be a bank and credit card. So you remember when we set up our checking and our savings and our petty cash, these are the different categories. Call it a Chase credit card. Because like I mentioned, you can have multiple cards. If you had multiple card vendors, you could set them up here so you can use their name. Down here, you can start tracking the account in QuickBooks. Again, if you have a card where you've had some transactions, or even if you initiated it, say the beginning of November, but haven't started using it till now, you can backdate the start to the beginning of the month. If there's no transactions, it really doesn't matter. But just to keep things, to keep the records going, once you start using QuickBooks, it becomes like a diary. So if you really want to know, like somebody says, what was our first credit card and when did we start it? Maybe it's like 5 years from now, you can go back and look at the settings and see when it was first activated, not necessarily when you first did your transaction, but we'll say today. If there's a balance already on the account, you've already used it to spend some money, or if there's a fee, some do still charge fees, then you'd put that here and that'll carry it over. Otherwise, you can always add a fee in the register, just like you normally would. And then down here, description, let's call it a general use credit card. The description is not required, but if you are going to have multiple cards, it's a good idea to differentiate them. So that way you can keep track of what the credit cards do. And like I said, there could be some one credit card for office expenses and another corporate card. And I'm sure you've seen the ads on TV where they say, I just got so much money back. I hired a new employee, or I did, whatever they did with it. So account type is credit card and save.
This would work for a gas card too, that you give your employees.
Sure. Yeah, it'll work for a gas card, because a gas card is basically a credit card. It's just a credit card with a certain company.
That's what my brother does for his air conditioning tanks.
Yeah. Right on.
They all have their van
Mhm.
and they all have a gas card.
Great.
To fill up the-
Yeah, that's the way it works, and then
with the vans.
right. And again, if that card is assigned to that particular van,
Mhm.
then it's essentially at a glance, you can see what the van's costing in gas and even compare it to others if you're really into that. When, like I said, I had to check out one for the county. They had a clipboard, it was still paper and pencil, and you had to write the odometer start, odometer end, what program you were doing, and where you were going, so that way they could track it. And it's just another way of accounting. So the way credit cards work is when you make a purchase as a customer, the vendor does a transaction fee. It's applied a transaction fee. So that's why credit cards like people to use them, and they give incentives for people to use them, because it's like 2%. So if you go to the store and say it's Save Mart and you use a credit card, the credit card is going to charge the store 2% to use their card. That way, that's how they make money. And it doesn't sound like much, like 2%, that's not much, but it's everybody every time they use it. So one of the reasons stores default, like if you slide your card, they'll say, do you want credit or debit? And it'll say first the debit, because they really like you to do the debit because they don't get charged for that. But the credit card, they do. So now on the other hand, if you're a big store like that, you probably get a better deal than just 2%. And then they do their incentives for their vendors too. But it's always going to be, somebody's going to pay something. That's how the credit cards make money. And it's on every single transaction. So there's a lot of competition out there. So it does pay to shop around when you are setting up your company credit card, or even a personal credit card. And now they even have it set up where you can tie it into your bank account. So if you start running out of credit, it'll pull money from your account. It'll do automatic payments from your account if you want to do that. A lot of them will have it if you pay off your balance in 30 days, there's no interest. And you think, oh, that's cool. But what happens is, I don't know about anybody else, but when I try to do that, I think, yeah, okay, great, I'll do that. And then 30 days comes along and, oh, okay, I'll pay half. And then it slips. And then they start making a little money off you through interest. So they make money off your vendor, whoever you're buying stuff from, and then you as the customer through interest. But it pays to shop around, even if you have a card and you're starting to get interest charges, or they're going to start charging you a fee. Some will do it where they don't charge a fee for a year, but then after that. So then after the year, if you can remember, write yourself a little note to shop around and see if you can find another one. And then they do what are called balance transfers. So if you sign up for a card, you will charge you a fee for 2 years and a free balance transfer, which means you can transfer the old card balance over into the new card and then save on the fees, and you get the new interest rate, whatever. So lots of little maneuverings like that.
And do they save money from getting you to sign up for automatic payment withdrawals or paperless still?
Yes, paperless saves them money because they don't do the postage and
So
the
they try to
processing of
get
paper.
you
Yes.
By saying, oh, it's good for the planet.
Well, and two things can be true at the same time, but yeah, you're right. Yeah, it's that's one of the reasons they push it so hard. It saves them all that processing time. And then, as we know, you can see it electronically. If you do things electronically, it's so much faster. Whereas if you're processing paper credit card statements, They're put it in the mail. You know, if the mail doesn't lose them or it gets delayed, it takes a few days. And now even the US Post Office said it might take longer because they're having to cut back. Okay. So then say a week, the person gets it and then they put it in their stack to do. So another couple of days. And then they say they write a check and mail it in. Then that's another week. So it slows things down. Then they have to process the paper check.
When they get it.
Right. So that somebody has to open the envelope, put the check through. Now the checks can go through scanners and a lot of them do now, but it's just much more cost efficient to do it electronically if you can. So that's, yeah, they love to do that. And then I had a friend, he's a credit card abuser. He, in his younger days, he decided he had really good credit because he had lots of cards. But what he would do is he would rack up a card and then just as he had to pay, get a new card, transfer the balance over, and then he was good. So he kept doing that. And his plan was to die with a lot of debt because then it would just disappear, right? But he could keep doing this for life, he thought. And then sure enough, 1 month he missed. And then, you know, it hurt his credit, so he couldn't get another one. And yeah, it crashed. So that was a bad idea. So don't do that. That's a good lesson of what not to do. All right, so you'll see that it's not on the top of our list here. So I'm just going to type in card. And I click on view register. And it pops up and it looks just like our check register. So as far as QuickBooks is concerned, that's basically how it's going to work. It's going to work like a check register. So it's going to keep track of the transactions and including your payments to it. And like I said before, the payments can be electronic or they can be paper. So you do have, you will see down here that you've got credit card interest, credit card rewards. So you can start tracking those in your card too. So here's the bad news. If you do get a lot of rewards, those can be counted as income against you at the end of the year when you're doing your taxes. So if you get a free trip to Hawaii, you think, wow, I got a free trip to Hawaii. Okay, well, don't forget, you're gonna have to pay taxes on that because that's income. So even though it's a reward through your credit card, you're getting paid something. Every time you're paid something over $600, that's taxable. And the tax people want their cut. So anyway, you can track that through here too. So what's the first thing you do when you get a credit card? Let's go try it out. We got to go spend some money. So we're going to do that now. If you have multiple credit cards, they will show up there. So I'm going to go into my expenses and my vendors. We're going to pay for product with this, but you could also do like rent if the landlord accepts credit cards. Now, some won't because they don't want that fee. They don't want to deal with it. So it just kind of depends on the organization you're dealing with. But I'm sure as you know that like the electric company, they'll accept it. PG&E, they accept credit cards. They like that too because it's a little faster for them. And again, saves that whole check processing. Gas companies, I mean, like gas stations, you'll see they have two cards or two categories of prices: the credit card price and then the cash price. Why are they doing that? That's just what I said there. They're going to have to pay a fee, and so they say, all right, if you pay cash, that's going to save us money, so we won't forward the fee to you. But if you do use a credit card, it's going to cost you. And sometimes they'll call these in certain businesses convenience fees if you're using a credit card, which, you know, it's not very convenient to have to pay an extra fee, but that's not how they work. All right, so I'm going to go to my ABC warehouse. I'm going to create a purchase order. The purchase order works exactly the same as before. And it's not until we put a bill against this purchase order and pay it that we're going to have to worry about our credit card. So go ahead and pick a vendor, any vendor, products, any products. that you like to buy. You might check your inventory and see if you're low on anything. I stocked up yesterday, so it should be pretty good. So save and close on my purchase order. Here's my purchase order, so I'm going to create the bill. So this part's exactly the same as we did before. Save and close. Now I have one open bill. And here we go, make a payment. All right, everything pops up like normal. The only thing we're going to change now is here where it says bank/credit card or credit account. We're going to switch to Chase credit card. You will notice there are subtle changes here. One is the balance is 0. Well, we know that. But you also see up here bill payment number 1. So what it's doing, it's going to start the numbering system over again for the credit cards, because the checking account could be the check number, right? So if you're not paying with a check number, you don't want to keep numbering off of that because you'll have checks that have already looked like they've already been used. So in this case, it's kind of starting from scratch. But otherwise, it's exactly the same. So again, you've got a memo. If you want to put a note to it, if you put an attachment to it, you can attach it here. But otherwise, save and close. All right, so the minute I do that, all my vendors are paid, or this particular one vendor is paid. All right. So let's take a look at it. Let's go to the chart of accounts. This time, I'm gonna look it up by the name I gave it. There's the Chase credit card, and you'll see it now carries over a balance. So it's now going to start the balance, and keep a running balance for as long as you go. Click on View Register. And there it is. So how does this work in the real world? The vendor, if you've done this electronically in an online system, the vendor can automatically be paid. So that means it's already pinged to your account as of today's date. On the other hand, if you still get one those little forms, I think PG&E still does this, where you can put in, fill in by pen or pencil the credit card number and mail it. I mean, you could still record it today, but obviously it's going to take a couple days to get there, then they're going to process it. So it won't be an immediate impact on your credit card. That can make a difference if you are working with a card that gives you free interest for a month, for 30 days. So that 30 days can be important. You want to pay it off before they knock interest on it. So that's the other thing too. QuickBooks, the way we're using it, doesn't have live activities. Now, there are ways that you can tie in your credit card to QuickBooks, and they'll tell you all about how you can set that up. Sometimes there's a fee, other times not. And basically, as you use a credit card to pay the bill, like with the vendor, then QuickBooks will automatically update this. So we're still paying this manually, but the other way this could have happened is the vendor sends you their bill from QuickBooks, you process it, you click your credit card here, and then the credit card company gets the information, your vendor gets the information, and your QuickBooks gets the information all automatically. So you don't have to put it in manually. So convenient, but at the same time, like I said, the convenience sometimes can get out of hand. Go back to my vendors. And there's ABC. So when I look at my list, you can always tell how the bill was paid. Before we were saying bill payment check, now it says bill payment credit card. So you can still track it even within the vendor, and all the reports will do the same. So somebody asked in one of the other classes, can you pay a credit card on a credit card? The answer is sure. You can do this manually. And for QuickBooks, it's really easy. It's just like the transfer. If you're doing it, so let's say you had two cards. One was empty, and you're at the end of your 30 days on one card, and you don't want to get charged interest, but you don't want to pay it right away. You want another 30 days. You could use the one card to pay this card. Then you basically start the clock over again on the second card before you have to do it again. If you're really struggling and you don't want to pay it at the end of that period, set it back. You can pay the card off of the card. Now, some credit card companies are onto that, and they'll put restrictions on that. But for the most part, you can kind of do that stuff. But if your company's doing that stuff, I would get my resume up to date, because why are you doing this? It's extra book work, and is it because it can't pay the bills, there's not enough income, things like that. But the other thing credit cards can do is they work as a payment plan. Like if you make a big purchase, you can use a credit card, and then of course you buy it with a card, you get it without putting any cash out, and then pay it off over the year with probably a little interest. All right, I'm going to go back to my chart of accounts. When I come back, you'll see my search box contains my last entry. So I use the word Chase because that's the name I gave it. You also see the word purchases, because that has the word Chase in it too. So that matched the criteria. From here, if you ever make a mistake, you can always go back here and cancel this payment. So if you accidentally paid it by credit card, you can undo and fix it. The thing that's going to be true is next time you go to pay a bill, it's going to default to that because it's the last thing we use. So once you start using the credit card and the checking account, you got to keep a better eye on which account you're paying everything out of. So that's one of those little warnings to keep an eye on. Close this. Yep. The other option is you can run a report, and the report is the same information, but it's broken down as if it were a printed report rather than the register. The advantage to running this report is you can set the dates. Like if you just wanted to see last week. Now in my case, it's going to actually be the same. Actually, it's not, because it was last week. So the ending on the 13th, I only have one transaction. But I wanted this week to date. So there's the same. So just keep in mind that just like everything else, you can run these reports. You can print them on paper, PDF, email them, anything. Any questions on how we did that? All right. So let's practice it a little bit. Let's make 5 purchase orders. Receive bills. And pay bills with credit card. So if you're low on any products, here's a good chance to restock. So now I can see I've got my 5 purchase orders done. So now I've done my bills. I have 4 open bills. The reason I have 4 is I actually used United Distributors twice. So it combined 2 purchase orders onto 1. I still got my 5. Gonna double check here to make sure I've got my credit card. And when you're done, you'll have an ending balance, no longer 0. I'm in the hole 303.62.
Oh,
That's what I owe the credit card company. You add up all these over here, because I haven't paid them anything. And that doesn't count interest or fees or anything. But we're gonna be good. We're gonna pay it early, so there won't be any interest. And we got a fee-free credit card, so. But we'll also go over how to pay interest. Funny thing is, credit card interest, it's been a while, but it used to be deductible when credit cards first started getting popular, they're relatively new. So they were like the home interest deduction. But then as they got more popular, they said, wait a minute, that shouldn't be deductible. So they dropped it. So now it's not tax deductible. Well, let me pause that for a second. So as a business, it is a business expense. So you can expense it, but it used to be universally deductible. So, if you pay 30 cents in interest, that's 30 cents you can take off your profits before you're taxed. Because it's not really profit, right? And again, if you're watching the news, the chairman of the Federal Reserve is up for either reappointment or replacement. And oh yeah, now they can't. All the rumors are everywhere, and they can't let any hint come out, because if they do, it panics somebody, and then they sell their stocks when they shouldn't have, and buy stocks when they shouldn't have, and then when the truth comes out, they're in the wrong position. But that does make a difference, because right now the interest rates have been virtually nil, because they're trying to help the economy. But now we're getting inflation. So the Federal Reserve's job is to control interest rates so that inflation doesn't take off. That's their whole reason for existence, supposedly. So of course, it's right now not working, but they're saying, well, it's a different because it's COVID and all. So, that's a question. Does the president want to continue on this path with this person? Does he want to make a path correction? Do you want to pull somebody else in? And then once they're in, how does that affect interest rates? And then how that affects credit card rates. And they do change. So it's, again, that's where the news comes in and it affects everything you do. On the other hand, ignore it. It's going to change anyway. So they'll tell you when they're ready to change. And you decide if you want to keep that credit card or not. So there's how much I owe the credit card company. But I still have now my additional stock. So again, here's the theory. I haven't physically paid for them myself. It's not coming out of my account. If I can turn the stock around that I just bought, all the products I just bought, and sell them, I'll make back the money that I owe the credit card company plus my profit, right? So I can turn around and pay the credit card company in 30 days. And actually, pretty much I use their dime to buy stuff, sell it, and then turn around and pay them. So it does work that way. The problem, though, again, as you saw with my friend, is you can't always plan on it. But if you have a pretty good bet, even if you had a customer that wants a particularly large order and you don't want to tie up your capital, your working capital for that order, let's say it's a $50,000 order, which I think I made $3,000. So that's pretty steep for me. I might, if I really believe that customer, I might say, all right, we will do that. And then I might use a credit card to do that project, knowing that with our arrangement with that customer, he's going to pay me within 15 days. So they don't have the money to pay the credit card. And then I won't be charged interest or fees or anything. So you can do that too. It's one of those things that it's a judgment call if you want to try it. And it's a risk. But all life's risk. And when they say it takes money to make money, this is kind of the exception. It takes credit to make money. Just FYI on that, if it is a big project, and I'd say 50,000 compared to my 3,000 a month, it's pretty big. The other option is go to a bank. And some banks will lend to businesses for that, especially if you have a relationship with a banker and they know you. On the other hand, a lot of paperwork to fill out, and it's a hit and miss. So the bank usually give you a better rate, but the credit cards are much easier. So a lot of companies will use credit cards for this. All right, I'm going to take a look at my register for my credit card again. So here are all the things I've purchased. There is another way to use the credit card, and that is for your regular bills. So I go back to my expenses and my vendors. I'm going to pay my PG&E bill by credit card. So Pacific Gas and Electric, I'm just going to create the bill. Now remember, when it's a utility bill, you don't do a purchase order because basically assume they're going to send you as much electricity as you can use. So, and because I'm not buying product from them, I'm not going to use this item. I'm going to use the category details. And then even right here, I'll put in electricity. Did I spell it right? So as I start typing, the utilities electricity pops up as the account I want to charge it under. So this is just for tracking purposes in QuickBooks. And I'll say November electric bill. And our amount's $131.28. Again, you'll see billable. You can set tax to it if you're going to bill a customer for it or not. This is just general operating expenses. And you can even assign a customer. So we'll leave those as they are. And then we'll save and close. So this way works just like we did before. So I've got an open bill. There it is. Make a payment. So I'm going to select up here my credit card. Make sure that's selected. You should see that when it came up, it did come up defaulted to the credit card because that's the last account we used to pay bills. And save and close. And that's paid. There you go. So it works exactly the same way when you're doing this. I've noticed, like we have Xfinity, Comcast for our internet and our TV, and I keep trying to cancel them to find something else. And every time I call up, they say, "Oh well, we'll give you this deal. Let me just look at your rates here. Oh, we can lower it. Okay, whatever." Then it's just inertia because that's what we've always done. It's much easier than having to change, fewer headaches, and then we're used to all the channels. So anyway, I have noticed though that if I pay using my checking account, it's a lot slower than if I use my same account as a credit card because they're linked now. So because when I first did it, I thought, hey, how come they haven't taken it out yet? What's going on? And I waited a couple of days, and sure enough, it took longer to use it as a checking account than as a credit card. Even though on my end, it's the exact same account, exact same money. It's just how it's processed. So in this case, PG will take it as a credit card, and they will get their money right away. And it just adds to our balance. So it's 6:54. We'll take a 10-minute break. We'll come back. And then we're going to pay our credit card off. What responsible credit users we are. All right, so we're back. Before we pay our credit card, let's just do something else real quick. Let's make 2 more purchase orders. Receive bills. Pay with the checking account. So the reason we're doing this is because we know the computer is going to default to the credit card. Now we got to switch it back. There's my 2 open bills. You'll see once I switch back to the checking account, up top, it went back to the numbering system for my checks. Change the reference number and give me the updated balance. There's my 2. Those 2, of course, will not show up on my credit card register. They are, however, in my checking account. So I'm using 2 different forms of payment. If you see them here, the last two we did, then you forgot to switch over the checking account when you pay the bill. So when I click up here in my history, I click on my most recent one. Here's the payment status. It's paid, but they both will show paid. And you can see there's my check number, 1,075. If you did make the mistake, you can always go back here and you can change it. So again, I was showing how you can change it, but I did not change it. But I changed it back. So I left it exactly the way it was, but still QuickBooks says, do you want to leave without saving? Yes, I do. But that's one of those times, the minute you make a change, now QuickBooks is going to remember, oh, you made a change here. Even if you change it back exactly as it was before, it'll still remind you. So that one, you just have to be confident saying, I know what the change was, and no, I don't want to save it. All right, you ready to pay the credit card bill? So it's pretty easy, of course. Easy but painful. One more bill to pay. So I'm going to go up here to New. And you've got an option over here. It says Pay Down Credit Card. So you'll have to note how much you've got in your balance, your credit card, remaining balance. So I can see it up here. Got $434.90. If you want, you can select the figure here, and then for the PC version of a mouse, I can right click and copy that figure, or just remember it. Go up to New, Pay Down Credit Card. And when this screen comes up, the first thing we're gonna have to answer is which credit card do we want to pay? Well, I only have one active credit card, so that's easy. You can include a payee name here if you wanted to. If it were, but it has to be under your vendors. We don't need to, because remember the way this is working is we are simply recording what's been done in maybe another system. Like if you pay the credit card online, then you're going here and recording it. It's not actively going to do that. As I mentioned before, you can set it up to do that, but as I don't really want to connect my credit card to the class account, obviously, it can't do that. How much did you want to pay? You put in the amount. I'm going to paste, Control V to paste, or I can right click, click on paste. I did it twice, but then it carries over that amount. I don't have to remember or worry about remembering it or worrying about making a typo, like 434.09. It'll ask you the date of the payment. And again, the date of the payment is when you were recording it, not necessarily the date that the money was moved from your account. They, like I said, they can be different depending on your company that you're working with when they process it. However, for the most part, unless you, again, you're trying to beat the deadline for an interest payment, on your end, it doesn't matter. QuickBooks doesn't care, doesn't have any impact. Then you have to pick the account you want to use to pay it. So I'm going to use my checking account. If you want the computer to actually generate a check now, I can click. I made a payment by check, print later, and it will go into the print queue and print off whatever next check number comes up. Or if I turn this off, it will now select what check number. You can change that here, or you can just leave it turned off. If it's an electronic payment, you can just leave it turned off. So we'll assume it's electronic payment this time. And again, you got the memos and attachments. So down below, you've got cancel and clear, save and close, save and new. Does anybody notice something that's missing though? Not missing, but what we've seen before. There's no make recurring. So this is one of the things QuickBooks will not allow you to do as a recurring payment, which is funny because we've gone through a couple items before where you probably wouldn't use it as a recurring entry. This one you actually might. You want to pay $50 every month for your credit card, you might set that up. So actually there are ways to do that, but you can't do it through this pay down the balance screen. I'm going to hide that. So I am going to save and close. When I go back to my chart of accounts, there's my Chase credit card. You'll see my balance now shows 0. You can view the register. Here's my credit card payment. Easy enough. Now let's go back out. Let's take a look at my checking. There's the payment. So it made one payment to cover everything, all the stuff I bought plus the electric bill. Okay. Could I break it up? Sure. You'll notice when we use this screen, it's not pay off, it's pay down the credit card. That's the phrase they use. So you can make any payment you want. You can actually overpay, and you can overpay a credit card if you write like a check, they'll process it. They'll just give you a positive balance. You can also just pay portions of it. You'll notice one thing it doesn't do, it doesn't account for fees or interest. So kind of have to put that in manually. All right, so let's do that next. But before we do that, let's spend some more money. Let's make 3 more purchase orders. Receive bills. Pay with credit card. So that way we'll have a few transactions. I'm going to create the bills on my 3 purchase orders. Now make payment with credit card. So one question is, when you're doing the bill with a credit card, does it always show as number 1? The answer is yes. That's the default. A lot of times, because credit card transactions aren't numbered unless you're generating a check to pay the credit card. Now they do have combo accounts that are truly just a combo credit account. And when you're writing a check, you're basically processing it as a credit card. But in QuickBooks, yeah, it defaults to number 1 as the payment number 1, even though you're further on. But you can change that manually as you go along. And you'll see I did not. So when I look here at my credit card register, all my bill payments are number 1, reference number 1. What I would normally do, if I were doing this for real, so if I had the vendor's invoice number, so it's 1862-1, I'd put that in there just to tie it one more time, that I paid that invoice with this credit card payment. So it's entirely optional. I would do it because the more you can run those strings and tie them together, the easier it becomes to find out when you're doing history and research. So let's say who was that? XYZ Wholesale. Oh no, Ziggy Shop. So the accounts receivable person from Ziggy Shop calls up and says, "Hey Dan, and I don't think we got that payment at 2625." You say, and I'd say, "You're sure? Let me look it up here." And as I look for it, I see here's a 2625. I'd say, all right, I see it here. We paid as a credit card on November 17th. Was that for invoice 19651? And they'll say, yes, it was. I'll say, well, I've got it here. You know, then you kind of work it out, whatever happened on their end. But having that number here, because I could have 7 or 8 invoices that I paid through my credit card to that same shop. And it's hard to keep them all straight. So those numbers do help. We're done with that. We're gonna pay $23.45 as an expense to Office Depot using the credit card. So this is going to be exactly like we did for our electric bill. However, it's going to be Office Depot, and then the account is going to be Office Supplies. So it's exactly the same but different. The process is the same, but you're going to use the Office Depot or Office Supplies account to do so. So I'm going to go to the chart of accounts, find my Chase. Oh, there it already came up. Go to View Register. So as you recall, where is it? There it is, Pacific Gas and Electric. So the way we did it before was we can go to our vendors, find Office Depot, and just create bill. Category is going to be Office Supplies. Description, you can make it up. I'll say copy paper. $23.45. And again, it's not for a customer, not billable. Save and close. Go down to my vendors list. There's the $23.45, so I'm going to make a payment. And it did default back to my credit card because that's the last thing I used. So all good, save and close. And then I go back to my chart of accounts, look at my Chase account. And there it is. All right, so now that we've got all those expenses to pay, before we pay it off, let's put some interest on it. So I'm gonna say I got a charge of 75 cents. I want to include it with this because I want to pay this off, but I want to include my little interest charge. And then we're gonna pay with it, pay it out of checking. All right, so how do we add an interest charge? Let's go to our expenses. And you can click on expenses up here, or you can use the vendors, either way. The only thing is we have to set up a vendor. So we said we're doing Chase Bank. You have to, in order to generate an expense, you have to apply it to somebody. So who's charging? Who are you paying? Well, we're paying the bank. So that's fine. You just have to add them as a vendor first. So from my expenses tab, I got to turn on expenses. I can do new transaction and expense. All right, so you'll notice it comes up with our same screen, except of course now it shows the category details. And I could have done this through vendors. I like to do this differently, just because just in the flow of everyday work flow, you get in the habit of doing things. And this is kind of different. So I want this to be different. I want to use a different process. As far as QuickBooks is concerned, though, it doesn't matter. You can go either way, and it's just happening. So payee, I have to add new. Click add new. Chase Bank. I go into my details, and I'll put in their address, 101 East 53rd Street, New York, New York. And 0012. Do you have to put an address in? Not really, because we're not going to send them a check. We're going to use this to add an expense to our credit card. So the way this works is over here where it says payment account, it's going to be the credit card. Are we paying it? No, not as like we're paying it off and it won't show up on any more bills, but we're tacking it on to the credit card. And so as far as QuickBooks is concerned, that's a payment. So under category, you can see you've got, if I type in the word credit, it shows interest paid as account, and then there's sub accounts. I can tell they're sub accounts because they're tabbed in. There's credit card interest, business loan interest, mortgage interest. We're going to do credit card interest. You can put a description in. I'll just type in interest for the month of November. I can type November right. How much? I said 75 cents. And there you go. So we're not going to charge it to any customer. So all that would be left alone. So where'd the 75 cents come from? Probably from the statement. I got a statement, either e-statement or the paper, and I could see the interest rate. Now, for most people, they just pay the balance. We can't just do that because we put the balance in without the interest so far. So we have to add the interest in manually. All right. The other thing that can happen is they could make a mistake. Their computers can make a mistake. So if you wanted to, you could figure out, say, the interest rate. They have to say it on every statement, and then look at the total amount and do the numbers and see if it works out right. And they could be off. And sometimes it looks off if you do that by a penny. And what'll happen is the general rule is if the interest rate times the total amount comes out to, in this case, 0.76, or pardon me, 75 cents, 0.756, they would round up to 76. If it's 0.754, you round down. So 5 and above, round up. Anything under 5, down. So if you take that into consideration, then you should come up with 75 cents, and then you agree. And then I just save and close. So I go back to my chart of accounts. Look at my credit card. And there it is, waiting to be paid off. So it added to my total. So that's a little different in working with a credit card for a business than working for an individual, because most people don't have to track it. But one thing this will do for you is it will tell you how much interest you have paid over the year. And when you're doing your budgeting, it's a good way to say, well, okay, let's look at our credit card. Well, maybe we should be using the credit card so much. Or maybe we should pay it early and then we don't have to pay so much. All right, so I have an outstanding balance of $146.55. So I'm going to copy that. We're going to pay it off now from our checking account. So I'm going to new, pay down credit card. Select my credit card. How much? $146.55. And I just did a Control V to paste. And I say checking account. Save and close. And ta-da, my ending balance is 0. See how that works? I could have paid everything but the interest, and depending on how things work, you're not supposed to charge interest on interest to compound it. So a lot of times they won't have that, and then they won't charge you late fees on interest either. On the other hand, they're mean. They will charge the interest on the interest. That's not a very good part. I'll bet that's going to be a high maintenance fee and all these other things, because that's when it really stacks up, is when you start paying your interest for this month plus interest on the interest for last month, and back and forth. That, and I'm sure you've heard about people doing that, going crazy with credit cards, and that's why they're so dangerous. All right, so any questions on how we did that? All right, let's practice it. So let's make 4 purchase orders. Receive bills. Pay bills with credit card. Then to pay $15.12 as an expense. To Office Max this time, using the credit card. So then we'll add 33 cents as an interest expense onto the credit card. And then pay the credit card. So when you're all done, your credit card balance should be 0. So go to my vendors. So I got my 4 purchase orders. Now I'll just create the bill. So I got my purchase orders in. And like I said, I'll go over to expenses. Although when I was doing purchase orders, I could have created a new bill at that point too. But like I said before, I like to try to keep them straight by making them different processes. So Office Max supplies. There's my expense. Now I have to switch over to the checking account. From the checking account to my Chase credit card. Interest. $0.33. So I can see my credit card. Here are my transactions. I am ready. Pay down credit card. So when you're done, your credit card register should show a balance of 0. And when you're done with that, we're done for the evening. And that's how you work with credit cards. Where the trouble comes is when you have more than one. You got to keep track of which goes where.
Just for one.
Yeah, right. But again, if they're categorized for certain uses, that helps a little bit. A lot of people don't or think that, it's 33 cents. Why bother? It takes me more time to put in that number and I'm getting paid, say $20 an hour. If I figured it out, it's probably not worth 30 cents. Well, it's not that. It's not the value of the amount. It's is the amount correct or not? Because as you can see, you do have the ability to go and reconcile these later on with your credit card statement. And whether it's 33 cents or $33, if it's wrong, it's wrong. So keeping it correct just keeps everything nice and tidy.
The coin shortage. Someone said they went to Walmart and their total was $24.99. So they paid $25. Their change was 1 cent, but because of the coin shortage, the cashier had to round up to $1. And
Oh,
she got $1.
a
And she
penny.
showed the receipt.
Yeah. It's pretty good. So it's a kind of like coupon, a coin shortage coupon, get a discount. So she just threw away the remainder, right?
Yeah.
Because yeah, I don't understand why we still have a corn shortage, but yeah,
Yeah.
it's strange. I kind of suspect that they're just trying to get rid of coins because coins are a hassle. But I've heard it's all production because of COVID shutdowns and re-ramping up and everything, and you can't just turn it on like a light switch. It takes a while to get started up again. But we've been at this for a while. They should have a national clean out your couch day. And everybody needs to look in their easy chairs and their couches and pull all the change out and put it back in the system.
Yeah, a lot of places want exact change
Right,
or your card.
right. Well, the thing I liked about, Walmart, Target too, is when they accepted coins, got a bunch of coins just laying around. So I would put them in my pocket when I'm going to the store. And then when I pay, because the way their checkout lines work, I don't have anybody directly behind me. So I don't feel like I'm holding them up. I could take out my wad of coins and just feed them in. I don't care how much it is because I know I'm going to pay the remainder in card or bill, and I could get rid of my coins that way. But they shut that off, at least for now.
Yeah, banks would get mad if you went in and said, I want to deposit all these coins.
Right?
We don't want them. We don't.
And when I was a kid growing up, they loved it. Well, at least they told me that. Bring in your coins, we'll count it for you. They run it to the machine. I used to love to watch the machine, do its thing, and that was pretty cool. And stack up the coins. But it is labor intensive. But I
Now
think,
they have those machines
yeah,
that do it for you, but they keep percentage, right?
right. Well, it depends on the machine. Some stores, they will give you a credit. It's like a store card that you could use to pay something. Otherwise, it is a fee if you want cash or bills. So some credit unions too. I know our credit union will still count coins. But when I was growing up, my grandfather had this big jug of coins, and it's just because he didn't want to spend them, so he just throw them in there. And then on certain days, like on our birthdays, we could go in, and his rule was you could reach in. You can't tilt the jar, but you could pull a handful of coins out. Whatever you grab, you could keep, but you had to count it, which that's pretty good. Make kids count and do the math. So that was always fun. But if we go straight to electronic payments, nobody will ever do that again. All right, so we're done for the night. We will be back tomorrow. Right? You're welcome. All right. Everybody have a good night.